So today, what I wanted to go over with you guys is how to build a proper mindset when it comes to trading, right? It's one of those things where we're all here, right? We're all a part of Revolt and GFU to make money, learn the skill set of trading, right? But how do you actually do that, right? Is it having the best strategy? Is it uh, being around the right people, right? Is it having the proper mindset? It's all of those things put together, but without having the proper mindset when it comes to trading, without, not letting your emotions handle what you do when you're in a trade or before you enter a trade and after the trade, right? That's what matters the most. So we're going to get into it. I'm going to share my screen here and we are going to talk about it, right? So the importance of having the right trading mindset, right? First thing you want to do is you want to think like a risk manager, not a gambler, right? The most important thing is being able to risk and manage your risk, right? Instead of gambling and hoping the market's going to go in your direction, right? This is the most important thing, right? Your job as a trader isn't to make money, it's to protect your capital, right? The outcome, once you protect your capital and do the right things long enough consistently, you will start to see results, which means money when it comes to trading, right? But if you don't understand or know how to protect your capital, right, then you're probably not going to be making money consistently, right? Drop a 1 in the chat if you're here, right, learning the skill set of trading, not just to make money, but to be consistent with making money, right? And making a lot of money in a long period of time, consistently, week after week after week after week, right? I'm going to drop a 1 as well, because that's why we are all here, right? It's not to make one major trade, make $10,000 one time, right? It's to make money consistently with trading. And how you're going to do that is by protecting your capital, right? We don't want to chase profits. We want to focus on taking good trades, not winning trades, right? This is one thing that I see a lot. And one thing that I noticed in the beginning when I first started is we tend to want to just make winning trades, right? We're not focused on taking the good trades. We're just focused on making money, right? And that's how you chase or start to chase the profits, right? And then what ends up happening is, right, you chase, you convince yourself that the market is going in a certain direction, right? When clearly the market's telling you something completely different, right? So focus on taking good trades and not winning trades, right? A losing trade can be a good trade if what? If you executed your strategy, right? If you waited for all of the confirmations with your strategy, right? If you didn't chase the market and you hit stop loss, so you got in one more time and one more time and another time just to see the market go in the direction that you want to see, right? Not every losing trade is a bad trade. It's only a bad trade if you didn't do your due diligence to make sure that your strategy played out, right? If you didn't chase the profits, didn't chase the market, right? These are good things that can happen even when you're taking losing trades, right? And you have to accept that losing is part of the game, and even the best of the best lose trades, right? It's such an important thing to accept the fact that you're not going to win every single trade that you take, right? Would it be nice? Is that, what all of us want to do is win every single trade, right? It would be very nice, right? You don't have to worry about losing any money or losing any trades, but that's not the reality of it, right? Reality is that you're going to, at some point, have a losing trade if you haven't already experienced that, right? If you look at Nick Gomez, for example, right, somebody who has one of the highest winning trade rates inside of GFU, somebody who makes millions of dollars a year trading, right? He posted on his story today, since April till now, he has sent out 57 trade ideas, right, on GFU Connect, and even he has lost 10 of those trades, right? It's about an 83% win rate since April, right? But 47 winning trades and 10 losing trades. That means he is still losing trades, right? Even though he's making a lot of money doing this and he knows exactly what's going on, right? So you being somebody that's brand new, or maybe a couple weeks in, maybe a couple months, a year, whatever it is, you have to accept the fact that losing is just part of the game, right? And focus on taking good trades, not just winning trades, right? Even the best of the best lose trades all the time. All right, then you want to detach your emotions from your trading, right? Fear and greed are your biggest enemy when it comes to trading, right? Your fear leads to hesitation or panic selling. That means, when you're unsure and you don't really know if you want to take the trade or not, then you hesitate, you don't take that trade, and then it takes off and it goes in the right direction. Right now, you didn't enter that trade at all because you were unsure of what was going on. You didn't trust your strategy, or you didn't trust that the market was going to go in your direction, right? Or you start panic selling, which means you're in a good trade and then you exit too early, right? Maybe it's just about to hit, take profit one or take profit two. And then instead of, moving your stop loss and adjusting your risk, right, you just trade and close it the whole time, right? It's one of those things where you don't want to let the fear get in the way of your trading. You don't want to hesitate when entering a trade, but you also don't want to close too early, right? These are all things that I'm sure most of you or all of you have experienced when it comes to trading, right? And I'm no different. I've done that many times, right? We all have to learn and go through these things and, see what works for us and what doesn't. But once you fear or hesitate or panic and close your positions too early, what's the outcome going to be, right? You're either not going to get that winning trade, right? Or you're going to close too early and not have that trade see and go to, your take profit number 3. And then greed on the other side, greed causes you to overtrade or hold your positions for too long, right? We want to see the money, we want to see the profits, and what do? We trade every single day, 4 times a day. We think that the market's just going to, give us everything we want from it, right? We're taking too many trades, or we're over leveraging because Nick called out a trade idea and we think this is going to be the one that goes to TP3, and then it doesn't. And you're like, I just lost 50% of my account instead of, 1 to 2% like I talked about, or it's in my trading plan, right? Don't get too greedy, and also don't fear the markets. Trust your strategy, trust the scanner that you use, trust the educators that we follow, but also do it in a way where you're using proper risk management, right? And not holding your positions for too long either when, it hits TP1 or TP2 and you think, or even TP3, and then you think, this is going to go way into new all-time high in territory, right? We're going to see crazy things happen in the market and we're just going to take off from here, right? And then you just hold too long, and then instead of moving your stop loss into break even, right? Instead of paying yourself as the market progresses higher and higher or lower and lower, right? You just hold on too long, and then the market reverses you and stops you out, right? There's a reason why we have 3 different levels of take profits, right? So that you can pay yourself at these different points in time, right? Because the market, it's not always, right, gonna go your direction, or it's not always gonna do exactly what you want it to do or what you see it doing, right? And you gotta have to avoid revenge trading, right? Revenge trading is when you take a trade, right, and it hits your stop loss, and you're so focused on the market going in that direction that you just keep entering trades, right, when the market goes lower and lower and lower and lower, right, or higher and higher, and you keep selling, 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 right? You have to avoid revenge trading. And if the market hits your stop loss, you have to, you know, go back and see, why did that happen? Did I execute my strategy properly? Right? Did I follow all the steps? Did everything align? All my confirmations that I look for? Right? Is the market even going in an uptrend, right, or a downtrend, or am I just seeing something different? Right? There's a reason why we've gone through over the last, few months, market structure, how to find your zones, how to enter in your zone, right? How to see the reaction in your zone. All these different things is because the number one thing when it comes to trading that every trader needs to learn and understand is market structure, right? You have to understand, is the market going in an uptrend or a downtrend? And then from there, right, if it does hit your stop loss and let's say it breaks through a major level, right, whether it goes way higher or way lower, you have to reevaluate the chart and reevaluate that market and see, are we still in an uptrend, right? Did we flip from an uptrend to a downtrend or vice versa, right? That's how you can also avoid revenge trading, is by just going back to the basics, going back to the bigger time frames and seeing, what is the market telling us? What is the market trying to show us? And then reevaluate and take another trade from there, right? And don't get attached to a trade, position, or bias, is like we talked about, right? The market doesn't have to do everything that you think it's going to do, right? This is why the big institutions and the major banks, right, the market makers, they know exactly where people stop losses, entries, take profits, where all those things are, right? You have to position yourself in a way where, you understand that, if you're thinking the market's going to go higher, you have to understand that it can also go lower, right? It doesn't have to go in your direction, right? There's different strategies and scanners and things that we use to give us an edge in the market, right? But even that is not always a guarantee that it's going to go in that direction, right? So don't get attached to a trade, right, where you're thinking like, oh, this trade is fine, it's going to hit take profit 3, I don't have to go to break even, I don't have to pay myself on the way up, it's fine, Nick sent it out, or somebody else, right? Or you're in a position and you just think, this is the best trade that I've ever taken. All of my confirmations have, you know, went through, and there's no way it's hitting stop loss, right? But then it hits your stop loss, and you're like, man, I got to get back in the market because there's no way that it just dropped this low. It has to go higher, right? And if the market has shifted from an uptrend to a downtrend, right, you have to understand which way is the market going at all times, right? Because it can flip from buys to sells. We've seen it over the last few weeks with crypto, right? Bitcoin hit 125,000 not too long ago, about 3 weeks ago. And now just a couple weeks later, right, we hit less than 108,000, right? We flipped from an uptrend to hitting new all-time highs to a downtrend, right? I actually want to show you guys what that looks like on the chart, right? If we go to the 4-hour chart, what do we see here? Bitcoin hit this level of, this point of interest that we were looking at 111,800, and then we continued in this uptrend. But what ended up happening, right, after we broke this level here, right? We broke this key level of support at 118,000, right? We went lower and lower and lower, and we went into a downtrend, right? These are different things that we have to look for and understand, that the market can flip on us and that our bias is not always right. Right? We have to reevaluate and see, are we actually still in an uptrend or actually still in a downtrend? Right? So don't get attached to a trade position or your bias. Then patience and discipline. right? Don't take trades just to take a trade, right? Sometimes the best trade is no trade at all. There's a reason, right, why we say don't overtrade. Don't trade every single day. Pick a few days of the week that work best for you, right? What you want to do is you can set up, you see and journal your trades and everything that you're doing over the week, and you can see which days, right, you got maybe emotional with your trading, which days just didn't work out for you, which days were really good for you, right? And then adjust your schedule to those specific days, right? And not just taking trades just to take a trade, right? We're all here to make money, but it's not going to happen if you're taking every single trade that you think you see in the market, right? If you're taking more than 10 trades a week, that's probably too many, right? In the last 2 weeks, I think I've maybe taken 4 or 5 trades in the last 2 weeks, and I've still made over $1,000 doing that in 2 weeks, right? It's because I don't take every single trade that appears in the chart. I make sure I follow my strategy, right? I'm disciplined and not taking trades whenever I feel like it, right? Making sure that I'm executing the right high probability setups, right? Which brings us to the next point, which is wait for high probability setups, not just wishful thinking entries, right? We want to make sure that every single step of our strategy aligns and then enter into the trade, right? Not just enter a trade and, hopefully it hits take profit. Hopefully it goes higher. Hopefully it goes lower, right? The higher probability setups is what's going to get you, right, those trades that you want to see, right? Following your strategy, learning the strategy from Nick, from Donnie, learning smart money, learning Trend Trap with Jay and with me, right? Waiting for those high probability setups is going to help you, number one, be patient and let the market come to you, right? And also be disciplined to not enter too early when the market is not yet in our zone, right? We don't want to just wishful thinking and just enter whenever, and just press buy and sell all day long. It's not going to make you money, right? And then discipline is sticking to your strategy even when it gets repetitive and boring. Trading is one of those things where it's very repetitive. You do the same thing over and over and over and over again. It gets very boring, very repetitive, right? But that's what makes it fun. And that's what makes it easy when you get to a point where you are patient and you are disciplined with your trading, right? Early on, when I started trading, I was not patient. I was not disciplined. It wasn't until I got to a point where I waited for the high probability setups. I waited for the market to come to my area, right? I waited for the strategy to show me every single step and not just enter whenever I felt like it. That's when I started getting consistent. That's when I started making money with trading, right? Not just entering whenever you feel like it. You have to embrace your losses as learning, right? Losses are your tuition for trading, right? Every time you lose, you're paying your broker. Every time you lose, you're paying the banks and the institutions, right? You're just donating money to the markets, and that's something that we don't want to do. But it's also one of those things where we want to review our losing trades, right? Was the strategy bad? Meaning, did I follow through with every step of the strategy? Did I do what was necessary? Did I wait for it to come to my zone? Did I wait for it to react in my zone? Did I follow my rules with trading? Right? Did I risk only 1 to 2%? Right? Did I use a 0.01 lot size for every $100 I have in my account? Did your emotions take over? Right? What happened during those losing trades? And then you have to stay unattached to the outcome, but attached to the process. Right? Meaning you can't let the outcome affect your emotions when you're trading. Like we talked about, you're going to have losing trades, right? But what are you learning from those losing trades? Are you learning to adjust your stop loss? Are you learning to adjust your entry level to a little bit lower, a little bit higher, right? Are you learning to put your stop loss in break even, reduce risk, and pay yourself on the way up when you're in profit? Right? That's how you become attached to the process, is by following your rules, not letting your emotions take over, following the strategy, right? Tapping into the sessions every single day with Jay, with Nick, with Donnie, with Christian Lopez, with Daniel Lopez, with everybody, right? Who are you following? What strategy are you learning? Right? And are you doing it consistently every single day? That's how you become attached to the process, right? It's going to take 1 to 2 years, 2 to 3 years, 4 or 5 years, maybe for some of you, right? It's not going to happen overnight, right? We all know that it's going to be a learning process, but how are we doing it? Or are we doing it in a way, right, where we give ourselves that edge in the market and fall in love with the process, but not the outcome, right? That's how you really start to destroy your mindset with trading, is when you're just so focused on the outcome and trading with, funds that you shouldn't be trading with, and hoping that you win. And, every losing trade, you're beating yourself up about it, right? You can't stay attached to the outcome. You have to stay attached to the process. And then you want to journal everything that you do, right? Keep a trading journal. Do it on your notes in your phone, right? Get a journal, write it down on white paper with blue ink, right? Write down every single trade that you took, whether it hit stop loss, whether it hit take profit, your entries and your exit points, right? The reason for the trade, why did I even get in this trade, right? Did it go through every single step of my strategy, right? Was it in an uptrend? Was it in a downtrend? Did it hit my zone? Did it react in my zone? Write down every single thing that you do when it comes to trading, right? And that's how you're going to grow, right? What were your emotions before, during, and after that trade? Did you feel good about getting into that trade? Or were you unsure? You were doubting yourself a little bit, right? And then during the trade, were you feeling good about the trade? Were you feeling not so good about it? Right? You want to write down all of these different things, right? And then after the trade, right? Did you feel good about the trade after, whether you won or you lost that trade, right? Did you execute properly? Did you follow your risk management plan? Did you follow your strategy, right? What were your emotions before, during, and after each trade that you took, right? And then outcome and lesson. What was the outcome of that trade? Was it a winning trade? Was it a losing trade? Right? How many pips did you make on that trade? How many pips did you lose on that trade? All right. And what was the lesson that you learned from that trade? Did you learn that maybe you should have waited a little bit longer for the market to play out a few more candles and show you some more data before entering that trade? Or should you have entered that trade a little bit earlier? Right? The market already reacted from your zone, and then you entered into the trade after it was already in profit for 20, 30 pips. Right? What was the outcome and what was the lesson? You want to write down every single thing when you're journaling, when you're journaling your trades. Right? That's how you're going to be able to go back and see and go back and learn from your mistakes that you made, and then not repeat them in the future. Right? You can journal and have the best notes, but if you keep doing the same things and not learning from those notes, not learning from what you've journaled, right, nothing's going to change. So you have to do it in a way where, right, you're learning from the previous trades that you've taken. From there, right, it's consistency over brilliance. You don't need to be a genius to trade, right? You just need to repeat good decisions, manage your risk, and be patient, right? You don't need to have a college degree and be the smartest person in the world to trade, right? What does it mean to make good decisions, manage risk, and be patient? It means follow your strategy, right? Make sure everything aligns. Use proper risk management, right? We've covered that multiple times, how to manage your risk, right? Not over leveraging and hoping the market will go in your direction this time because you put a bigger lot size in, right? You have to be patient. The market's going to do what it wants to do, right? But if you're not patient and you close too early or enter the market too early or do all these things, that's all going to affect, right, the outcome of your trades, right? You want to do this consistently. And a mediocre strategy executed consistently and with discipline will outperform a great strategy executed emotionally. Right? With trading, what do we talk about with proper risk management? Right? You can lose 70% of the time. That means you can lose 7 trades out of 10 and only win 3 times and still be profitable. Right? You're executing consistently and with discipline. You're sticking to your risk management plan, right? You're making sure that every single time you're waiting for every single confirmation with your strategy, right? That's being consistent and trading with discipline, right? That's how you're going to see that consistent growth, right, over the next few months, over the next few years. Not by having the best strategy in the world, right, and just executing emotionally whenever you think that it's the right time to enter. Right? A mediocre strategy will always outperform a strategy, the perfect strategy executed emotionally, if you execute it consistently and with discipline. And then you want to stay grounded in reality, right? There are no guarantees in the market, right? You have high probability setups, right, where you can give yourself an edge, right, and see certain things happening in the market, right, and be able to learn and understand how a market moves. But it doesn't mean that every single time that you execute your strategy perfectly, that you're going to win that trade, right? Because at the end of the day, it's the big banks, the major institutions that move the market where they want it to be moved, right? You're going to experience losing trades. There are never guarantees in the market, right? You want to avoid unrealistic expectations when it comes to trading. What does that mean? Right? That means I want to make $10,000 trading this month, but I'm 2 weeks into the business, 2 weeks into trading. I've never seen a chart in my life before. You think that's a realistic expectation when it comes to trading? Absolutely not. Right? You want to have and set proper goals when it comes to trading. Have realistic expectations. Right? Your first couple of months, you're probably just going to be figuring everything out, learning how to place the trades, learning how to follow the systems, learning how MetaTrader works, and all these different things that we teach, right? Does it happen that there's sometimes people that join the company and they make a lot of money in their first couple of weeks or first couple of days? It happens, right? But that's not realistic for every single person on this call, right? You have to avoid the unrealistic expectations and set real proper expectations and real goals that are going to help you get to where you want to be with trading. And then don't compare your chapter 1 to someone else's chapter 25. Right? If this is your first time ever trading, or you're brand new, you're a couple months into trading, a couple weeks, right? Maybe even a year, you can't expect to see results like Nick Gomez or like Donnie, right, or anybody else if it's your first couple of weeks trading, right? These are people who have been consistent and have been developing their skill set over the last 5, 7, 10, 20 plus years, right? These are people that have had a lot of time and skin in the game, right? And have gotten themselves to that point because of the mistakes that they've made and the lessons that they've learned, right? So if you're somebody who's brand new, right, or within your first year or first couple of years, don't expect to see the same results that somebody who's been doing this for 20 plus years has, right? Because it's just not realistic. The reason why they've got there is hard work and consistency and discipline, right, over the last X amount of years that they've been doing this. And then actionable steps I want to give you guys, right, is go through the Gifu Basics education. If you think that, you've already gone through it, right, you don't really need to go through it again, go through it again, right? Because everything starts with the basics. If you don't have that basic fundamental understanding and you're not constantly going back to the basics, right, and constantly learning and educating yourself, it's not going to work. You need to do it consistently, right? And go back to the basics. Go back and look at the bigger time frame and see which direction the market is going. Did we flip directions, right? Go through and see and learn and go through again with the basics education, right? Then find an educator, a strategy, or a scanner to copy and stick with only one, right? The moment that you go and you want to trade smart money like Donnie, and then you want to learn the golden era and the quantum scanner and the Smartmonic scanner, and you want to learn how Jay Awal trades with Trend Trap and uh, Christian Lopez, how he trades, right? The moment that you go and look at all these different things and all these different options, you're just going to start to confuse yourself, right? Find one educator, one strategy. You can add a strategy with the scanner, right? Copy that and stick with it, right? And then journal everything for the next 30 to 90 days, right? It takes 30 days to build a habit and 90 days to build a lifestyle. So if you stick with one strategy for the next 30 to 90 days, I guarantee you it'll become just second nature, right? It will just be another thing that you do. If you really follow and stick with that strategy, be patient, disciplined, all the things that we talked about today, right? And journal everything for the next 30 to 90 days, right? And then teach what you have learned to somebody else, right? Find somebody, whether that's your mentor, right? Your upline, somebody who brought you into the business, somebody that you know in the business that you're friends with, whoever it might be. Find somebody and teach them what you have learned. Teach them the strategy that you're learning. Teach them the scanner. Teach them how the educator teaches, everything. That's how you're going to grow, right? That's why I'm in a position today where I'm teaching you guys, is because I started doing it literally from the first or second week that I started. Right. I didn't know what I was doing, but I was so hungry to learn that I was just telling everybody exactly what I was doing. Right. I've been following Jay Awal with Trend Trap for 3 years. That's the first strategy that I started learning. I started learning smart money with Donnie as well. Right. And teaching everybody smart money. Why? Because I wanted to learn these different things, but I didn't understand, right, from the very beginning, that I had to teach somebody else to be able to learn quicker, right? Because when you're teaching somebody and you're explaining every single step to the strategy to them, you can see the mistakes that you made, right? They don't know it yet unless they know the strategy and they know, how the strategy works. But if it's somebody new or somebody that, is wanting to learn the skill set with you, they won't understand the errors that you have made. And what can you do now is learn from it, fix your mistakes, and go and teach it to them again. right? That's how you're going to learn. That's how you're going to grow with trading, is by teaching what you have learned to somebody else, right? Make sure you take a screenshot of this. I hope you guys have been taking notes on this stuff as well, right? Because this is stuff that has helped me over the last 3 years go from making no money in trading, right, to now doing this full time. So these are the things that you want to go through, that you want to stick with, right? And 30 to 90 days, stay patient, stay disciplined, and stay consistent with it. Right. And the last piece of advice that I have for you guys before we go into the quantum scanner training, right, is if you quit, you will never see results with trading. You will never make money. So don't have an IQ date, an I quit date, because the moment that you quit, the moment that you say trading is not for me and I'm never going to make money with this, and you stop doing it, that's exactly what's going to happen. You're never going to make money with it. Right. But if you stick with it, right, you stay consistent, you stay patient, you follow the systems, you follow the strategies, the scanners, you go through the education, you're committed and consistent, you do it every single day. That's how you're going to grow. That's how you're going to learn. And eventually, right, like we talked about, the profits will come and you will start to see consistent results with your trading. Right. Hopefully that all makes sense. Hopefully you guys got some value as well. Right, I'm going to stop sharing my screen here and see if there's any questions in the chat before we continue. If you guys have any questions, you can drop them now as well. But we're also going to do, right, and go through the quantum scanner just to show you guys, right, how to be able to use and leverage a scanner that we have access to. Let me just sign in here quickly. If you guys have any questions, drop them in the chat box. We will be right back with sharing the screen. Let's see here. No questions so far. Awesome. I guess I'm doing a pretty good job of explaining it then. So I'm going to share my screen here, and then we are going to talk about the quantum scanner. Drop a 2 in the chat if you guys can see my screen again. I want to make sure that it's all good. Perfect. Perfect. So the quantum scanner, right? This is a scanner that you can learn from Brandon Boyd and Josh Lee. Right? They're actually the creators of this scanner and have been using, perfecting it, and making it better over the last, number of years. And it's something that you can use with any strategy, right, to confirm your entries before you enter a trade, right? I see guys like Nick Gomez have used the scanner, right? Jay Awal has used the scanner. Brandon and Josh Lee, they only use the scanner to trade, right? Why is that? Why do they use the scanners? Because it works if you use it the correct way, right? So what is the correct way? So first off, here you can see, right, different things that will show you either an uptrend or a downtrend. The first thing that you want to see and you want to look for when you come onto the scanner is the macro phase arrow, right? The big arrow, that's the microwave arrow. This one, the macro phase arrow. And if it's blue and above the primary trend line, that means we're probably going to look for a reaction to continue higher in this market, right? The next thing that you want to look for, right, is these micro arrows that you see, right? Under each candle or above each candle, you will see that there are blue or red little arrows with the micro arrows. And this means that momentum is going to the upside or momentum is going to the downside, right? So you want to see the primary trend line, the market above the primary trend line. The macro phase arrow is kind of like our starting point when it comes to trading with the scanner. Then you want to make sure that we have the micro arrows underneath the candles, right? And they're blue. In this case, we're looking for buys, right? A micro pullback arrow or a microwave dot is where you're going to find your entries using the scanner, right? You want to wait for the market to come back down and retest the primary trend line. And then once you see a micro pullback arrow, which is a smaller arrow, right? This one right here. Once you see that, or you see a micro dot, that's when you have your confirmation to enter into the trade. Right, and also you want to look for your master strength panel at the top and make sure that you have a score of above 50, right? That's when it's going to be blue, and it's going to show you the average of each time frame from the 1 minute all the way to the weekly time frame, and we'll show you which time frames are bullish and which time frames are bearish, right? By being red or blue. And then at the very bottom here, we have the quantum oscillator, which is the buy zone in the blue zone, right? And the red zone is kind of the sell zone, right? So you want to make sure that in a bullish environment, if you want to buy the market, right, that all of these different things align, that everything is blue, right? To make it very simple, you want to look for the macro phase arrow. You want to make sure that it's blue. You want to make sure that you have the micro arrows that are also blue under each candle. You want to wait for some sort of pullback to the primary trend line, right? And then look for either a micro pullback arrow or a micro dot, right? And you want to make sure that with that micro pullback arrow or the micro dot, that it's inside the quantum oscillator, inside the blue zone when you enter that trade, right? And then also the master panel is above 50 and then it will be blue. Right, so now we have for the downtrend, it's the exact same thing, right? But everything is now red. You have your red primary trend line, right? You have your red macro phase arrow. The market is below the primary trend line, right? You see the micro pullback arrow is now red. The microwave dot is now red. The micro arrows on top of each candle are now red, right? And then the master strength panel is below a 40, which means it will now be red. You can see that the momentum for each time frame is now also red. And then the quantum oscillator, which is your sell zone in the red zone, you want to make sure that once the market, retraces and goes back to the primary trend line, before you enter, you want to make sure that the oscillator is inside the red zone, and you also have a micro pullback arrow or a microwave dot. Right, those are your confirmations when it comes to entering into the market. Right here, it shows the strength for the master strength panel, an uptrend, or the strength to the upside is 50 and above. Right, if it's 60 and above, that means it's a strong strength to the upside. Right, 45 to 50 is neutral strength, so that just kind of means the market is consolidating, right? It's inside a retracement, it's not really doing a whole lot, right? But if it's below 45, then you have down strength, and if it's below 40, now you have strong downward strength in the market, right? It's going to give you the average of all of the different time frames and makes things easier for you instead of flipping through every single one. Right? Here's the conditions that we talked about, right? The blue phase, the blue candles, the blue primary trend line, the score, right? This is all conditions that you need to see in an uptrend, right? Breakouts, you want the blue macro trend line. The entries, the blue dots or the blue triangles, which is the pullback arrows, and the oscillator in the blue, and then red phase with blue arrows. Right, so this is all the things that you need to look for in an uptrend or a downtrend. If you want to learn how the scanner works, every Monday to Friday at 1 p.m. Eastern Standard Time, right, which is 10 a.m. Pacific Standard Time, 11 a.m. MST, right, you can tap in and learn from Brandon Boyd and Dr. Josh Lee how the scanner works, right? Get some more insight on the scanner, get some trade ideas using the scanner as well, right? But just for an example here, because I want to show you guys that this scanner you can use, right, in any market, in any situation. Usually Brandon Boyd and Josh Lee, they use the scanner on a 1 minute time frame. But you can use it in any time frame, right? 1 minute time frame, they just do it for scalping. But how does the scanner work, right? Number one, we want to see the primary trend line being red or blue, right? And if it's red or blue, red means we want to see the market below the primary trend line, right? And what do we want to see is the macro phase arrow, which is that red arrow. What's the next step, right? We want to see a retracement back to the primary trend line. Then what do we want to see happen is a micro arrow or a micro dot to confirm our entry point. We want to make sure in a bearish environment that we have a strong downward trend. The panel is below 45, right? Below 40, meaning a strong strength to the downside. And then we want to see, right, the oscillator in the red zone to give us those sell ideas, right? So right here, what we see, right, with Euro USD, we're just going to take all these drawings off quickly here. What we see is we had the micro or the macro phase arrow, right, the big red arrow below the primary trend line. Then what do we have? We have a retracement back up to the primary trend line, right? And once it retraced to that primary trend line, right, what did we see happen here? We saw that once it retraced, we got the micro arrow and a micro dot to confirm our entry. And it was also at this point in the red zone right here as well. So this would have been a trade that you could have executed, right? And then you're probably wondering, how do I enter my stop loss, right? What you want to do is you want to actually take a little trend line here and go from your entry point, right? There you see, like on the outside, there's that gray zone. From the top of the gray zone when you enter to the bottom of your gray zone, that's going to be now your stop loss. Right? You're going to move the stop loss. I'm not sure why this is not letting me grab this here. But you want to move your stop loss from this area that you have here. It's like almost like stuck. There we go. Right, so from your entry point, which was right here, now you have your stop loss. Right, then you take your short position, you go from your entry, right, you have your stop loss. Not sure why this is not letting me do this. Right, your stop loss above, your take profit below. You want to do a 3-to-1 risk to reward always when you're trading. I'm not sure why this is not letting me grab this right now. But anyways, what you want to do is you want to grab your stop loss from that gray zone that you have here. And then, right, your stop loss is from your entry to the top of that line. And then your take profit is a 3-to-1 risk to reward like we talked about today. All right, so very simple. Just having some technical difficulties right now with the iPad. I'm not sure what's going on here. But those are the steps to using the scanner, right? And then what we talked about earlier with the mindset, that's really the most important thing when it comes to trading, right? Is, do you have a proper system, right? Are you following a strategy? Are you staying consistent with that strategy, right? And are you disciplined enough not to chase after the market, chase after results, chase after the blue in your MetaTrader, right? You're consistent enough that you're doing it day after day after day, repeating the same system. It's going to get boring, it's going to get repetitive, but that's how you're going to make money with trading. It's not by doing something different every single day, right? It's by doing the same things long enough consistently. That's how you're going to get results. That's how you're going to build, right, your proper mindset, become, right, more comfortable with your trading as well, and be able to focus on one thing and not look at all these different things, all these different trades and strategies and things you see online, and then also not comparing your chapter 1 to somebody else's chapter 25. Right, but with that being said, guys, I hope you guys all got some value on tonight's session, right? And yeah, we're gonna be back here next week on Tuesday. Not sure what I'm going to be training on yet, but I know that it's going to feed off of this and help you guys continue with your proper mindset and continue building that discipline, building that consistency. And I hope to see you guys all there next week on Tuesday. But with that being said, guys, I hope you guys all have a good rest of your night, and we'll see you guys all next week on Tuesday. Peace.